Welcome to the Deep Dive. Today we're tackling a really significant issue. It's rippling through the global economy and, well, hitting closer to home than maybe you think. This escalating tariff war between the U.S. and China. You flagged an insightful analysis from Business World for us.
I did, yeah.
And our mission today is really to cut through the noise, the complexity, and pull out the crucial knowledge. What are the actual risks, the potential consequences of this trade fight for the U.S. economy? Think of this as, your shortcut to understanding what really matters here.
Absolutely. And this isn't just about abstract trade figures floating around.
Right.
It's really about how these tariffs, they sort of act like a hidden tax. They influence everything from, say, the prices you pay at the checkout to the health of your investment portfolio. This Business World analysis, it gives us a pretty valuable framework for understanding these connections, these effects.
Okay.
And that's exactly what we're going to delve into.
Okay, so let's unpack this. The first area of the analysis really zooms in on is inflation and the pressure building on consumer prices.
Yeah.
We're looking at tariffs on Chinese imports that now total, what is it, hefty 145% if you combine all the levies?
That's the number, yeah. It's substantial.
So what's the immediate impact? What's the key insight here? Is it just that everyday stuff from China gets more expensive?
That's the core of it, exactly. The analysis gives some really concrete examples that kind of hit close to home.
Like what?
Well, consider electronics. Things like smartphones, right? They made up a pretty big chunk of U.S. imports from China.
9%, I think it said.
About that, yeah. Those are very likely going to see price hikes. And the same for batteries, powering our cars, our laptops, everything.
So not luxury items. These are things we use daily.
Integral to daily life, yeah. So what this really boils down to for you, the listener, is potentially paying more for the tech you rely on every single day.
And it's not just the finished gadgets themselves, is it? I saw Amazon CEO Andy Jassy. You raised a point about the third-party sellers.
Right, the ones with thin margins.
Yeah, exactly. He warned they might just have no choice but to pass those tariff costs straight on to, well, us, to the consumer.
Precisely. A lot of those sellers, they just don't have the financial cushion, They can't absorb such big tariff increases.
So that's a direct hit to your wallet when you're shopping online.
It is. And what's fascinating here is how it draws this direct line from, complex international trade policy right down to the final price you see on your screen when you're about to click buy. It just highlights how these global tensions can have very real, very personal financial consequences.
And it gets even wider, right? When you think about how many U.S. companies use components made in China for their own product.
Oh, definitely.
So even if you buy something that says made in the USA, some of its guts, some essential parts probably cross the Pacific with a tariff attached. How does that ripple out?
Right. So you get higher input costs. That's the cost of the raw materials, the components for these U.S. manufacturers. And that can set off a kind of chain reaction.
Okay.
To protect their own profit margins, they might feel forced to increase the prices of their finished goods.
So it spreads the inflation.
Exactly.
Right.
It expands that inflationary pressure beyond just the direct imports from China. It could potentially affect a much wider range of products you buy. The key insight, really, is that tariffs can act like this hidden tax embedded in all sorts of goods, not just the obvious imports.
Okay. Shifting gears a bit, the stock market. The Business World piece highlights some pretty significant turbulence there, particularly in tech, which is, huge engine for the U.S. markets. We've seen some big names taking a hit. What's the link to the tariffs?
Well, the specific examples they give really underscore how sensitive the market is here. Apple, for instance. Huge manufacturing presence in China.
Right.
Reportedly saw a 20% drop in its share price in the past month, according to the analysis.
Wow, 20%?
Yeah. And then you've got Tesla and NVIDIA, also key tech players. They saw significant falls, too, like 7% and 5% respectively. And these drops are directly tied, the analysis suggests, to investor worries about these tariffs, about potential supply chain chaos.
So even the giants aren't immune?
No, it tells us that even these seemingly untouchable companies are vulnerable when international trade disputes flare up. It's just the interconnected nature of global business today.
But then there was that interesting bounce, wasn't there? The NASDAQ jumped, what was it, 12%?
Yeah, a 12.16% surge, I think.
Right, after there was a pause on some global tariffs, though not the China ones. What does that tell us?
It just vividly illustrates how much the market is kind of on edge about these trade tensions.
Okay.
Any signal, even a partial one, that suggests maybe, just maybe, things could de-escalate. Well, investors react positively. They're clearly worried about a long trade war.
But the analysis says don't celebrate too soon.
Exactly. It rightly cautions that this doesn't mean the volatility is over, not while the core U.S.-China conflict is still simmering. The crucial takeaway is that market stability seems directly tied to geopolitics and trade policy now.
Now, it's not just U.S. consumers in the stock market feeling the heat, is it? The analysis talks about big risks for U.S. exporters, especially agriculture.
That's the other side of the coin, yeah. China's retaliatory tariffs?
They hit back.
They hit back, and they've targeted some really crucial sectors. These tariffs, now at 84% on U.S. goods, seem specifically designed to inflict pain on key American industries.
And soybeans are the big example.
They really are. Soybeans, the largest U.S. export to China, valued at a huge $145 billion this year, the report says.
Wow.
They're facing much lower demand because of these tariffs. So what this boils down to for American farmers is, well, losing a massive market.
And that's a direct blow, especially when many farmers are already dealing with falling prices elsewhere. It's like a double whammy.
Exactly right. They're not just losing this vital export destination, but the soybean surplus that results could push prices down even further domestically, really hitting their livelihoods. And the analysis also mentions briefly other U.S. export sectors like pharmaceuticals, petroleum. American companies there could see their market share in China shrink too.
So it strains the overall trade balance further.
It does. The key insight here is that trade wars aren't just about imports. They seriously harm American businesses that rely on selling their goods overseas.
Okay, so one of the stated goals of these tariffs we often hear is to encourage companies to bring manufacturing back home, reshoring.
Right.
But the analysis suggests this is, well, way more complicated than it sounds. What are the main hurdles?
Yeah, what's really interesting here is the gap between that intention and the sort of practical reality. Reviving domestic manufacturing is the goal, sure, but the analysis points out some major obstacles. For one, these global supply chains are incredibly intricate. They're deeply rooted. Companies have spent decades building these networks. You can't just, uproot huge factories and move them overnight.
Right, the infrastructure, the expertise.
It's all deeply embedded overseas for many industries.
And we've seen companies try to get around tariffs before, haven't we? Instead of fully moving. The analysis mentioned Chinese solar panel makers trying to route through Southeast Asia.
That's a perfect example of how global business adapts. Companies will naturally look for ways to minimize the tariff hit.
Loopholes.
Essentially, yeah. But as the analysis notes, governments adapt too. Those loopholes are increasingly being closed. We saw that with the broader tariffs applied to solar panels, wherever they came from eventually.
Okay.
But even if companies do decide to reshore, there's another big factor.
Which is, it costs more to make things here.
Precisely. Higher labor costs, different regulations, the sheer expense of building new factories and infrastructure in the U.S. It can all significantly hike up production costs.
So the tariffs protect you from imports, but your own costs go up.
Exactly. So even with tariff protection, if it costs way more to make the widget domestically, it might just cancel out the benefit. And that could limit actual job growth here and potentially make U.S. companies less competitive globally anyway. The key insight is that tariffs alone aren't some kind of magic wand for reshoring. They might even bring their own set of economic problems.
Okay, let's zoom out then. Bigger picture. The macroeconomic risks. The analysis touches on the very real concern of a recession.
Yeah, that's definitely in there.
It's quite sobering to read that even the former president apparently acknowledged privately that tariffs could trigger one. That's a pretty stark admission.
It is a significant point.
Yeah.
And the analysis mentions a, frankly, quite concerning projection from Goldman Sachs.
What do they say?
They warned that China's retaliation could lead to a dramatic an 80% reduction in U.S.-China trade.
80%.
80%. And if you connect that to the wider global economy, they projected a potential 7% fall in global GDP if the world breaks into fragmented trade blocs.
7%?
Yeah.
That's huge. That's a massive potential shockwave, way beyond just the U.S. and China.
Oh, absolutely. Major global implications.
And it's not just about the direct flow of goods, right? The analysis also points to the instability in the bond market. How does that fit in?
Right. The rising treasury yields, that's the return on U.S. government bonds, and just the general jumpiness in the bond market. It adds another layer of complexity and worry.
How so?
Well, it makes the Federal Reserve's job harder, managing inflation, setting interest rates. it gets more challenging. Higher bond yields can mean higher borrowing costs for businesses, for consumers. That can slow down the economy.
And didn't a White House advisor comment on that?
Yeah, Kevin Hassett. He reportedly mentioned this bond volatility was adding urgency to potentially pausing tariffs. It suggests there's recognition, at a high level of these interconnected financial pressures.
So trade policy is messing with the financial system's plumbing too.
That's a good way to put it. The crucial insight is that these decisions can have significant, sometimes unexpected, ripple effects across the entire financial system.
Looking beyond just the immediate economy, the analysis also gets into some really serious geopolitical and long-term strategic risks.
Yeah.
This feels like it moves beyond just dollars and cents.
It absolutely does. The potential for China to, say, restrict exports of critical rare earth metals.
Ah, yes. Things like germanium, gallium.
Exactly. Materials that are essential for the U.S. defense industry, for the high-tech sector.
That would be a major escalation.
Oh, huge. It would take the conflict far beyond just tariffs. It could have severe implications for U.S. national security or technological edge. It really highlights how trade fights can quickly get tangled up with much bigger geopolitical chess games.
And this isn't just a U.S.-China bubble, is it? The World Trade Organization is worried about the whole global economic order fracturing.
That's right. The WTO's warning about a bifurcated global economy. That's significant.
What does that mean, practically?
It suggests a future where trade relationships are maybe defined more by geopolitical alliances, who's friends with whom, rather than just pure economic efficiency.
So less efficient, maybe less innovative.
Potentially, yeah. Could lead to less specialization, reduced innovation, maybe slower global growth overall. And the analysis also reminds us there's a risk that U.S. allies like the EU, Japan, might eventually retaliate too, in response to U.S. actions.
Making things even worse.
Yeah, further escalating global trade tensions, maybe even isolating the U.S. economically. The key insight here is that this tariff war, it really has the potential to reshape the entire global economic and political map.
So, okay, bringing this all together, this deep dive into the business world analysis, it paints a pretty stark picture, doesn't it? This U.S.-China tariff war feels like a really high-stakes gamble. With a lot of potential downsides.
That really is the central takeaway, I think.
Yeah.
While the stated goals might be things like strengthening U.S. industry or fixing trade imbalances, the immediate and potential consequences, as laid out in the analysis, they seem heavily weighted towards the negative. You've got increased inflation squeezing families,
Right.
instability in financial markets, significant losses for key export sectors like agriculture.
And these aren't just abstract economic ideas. We're talking real risks, tangible effects on vital parts of the U.S. economy, like tech, a huge driver of innovation, and farming supporting communities all across the country.
Exactly. And the analysis really underscores that macroeconomic stability looking ahead seems deeply tied to whether this trade conflict can be de-escalated. Especially, considering China's stated vow to fight to the end, the future feels uncertain, carries significant risks.
So, as we wrap up this deep dive into the potential fallout from the U.S.-China tariff war, it really makes you stop and think, doesn't it?
It does.
Given how interconnected the global economy clearly is, the situation just hammers that home. What other things, maybe seemingly isolated events happening around the world right now, could have significant, maybe unexpected ripple effects on your daily life, on the wider economy? Things that might not even be on your radar yet. It's definitely a crucial question to keep in mind.
If you found this discussion informative, please like, subscribe, and share this channel to get daily discussions on a current economic topic.